Hello, hello, hi everyone. Hi everyone, hi everyone. If you can hear me, can you just type in a 111 if you are able to hear me? Open. Hi everyone, hi everyone. Okay, cool. So apologize, okay, for some technical error. So this is the first time I'm actually doing direct onto Zoom, okay, because I think this is actually a lot easier, so that you guys don't have to actually jump into the Zoom. So actually direct, you all can just watch on the Facebook Live. But the thing is, there's going to be some time lapse, which means that whatever I share, okay, on the Facebook, it will probably appear about 10 to 15 seconds later, which means that if I'm actually getting some response from you guys, okay, I will only be able to see your response about 15 seconds later. So please apologize if, let's say, you guys actually type something and then I will take some time for me to actually reply. All right, so that's just due to the difference in the Facebook Live as compared to the Zoom. Yeah. So we'll just wait, again, as usual, we will just wait for about 2:05. Okay, we will get started at 2:05 sharp, so that more people can actually jump into the Facebook Live. Okay, and then we will actually start at 2:05 sharp. So very good afternoon to everyone. Okay, once again, thanks everyone for tuning in to our Buy or Buy series. All right, today we're going to talk about this company called Challenger. So a company that we are pretty much all familiar with. Okay, we are definitely familiar with this brand. Okay, a lot of us probably, if you were to buy our laptops, we were to buy our hard drive, many of the small IT gadgets. Okay, this is actually one of the places that we do frequent quite often. So later on, we actually see how this company actually performed, all right, over the past few years, and of course, moving forward, is this a company that we actually want to invest in or not? So yeah, it's good to see all of you guys. Again, if you have any questions, okay, we will actually answer your questions at the back, at the end of the session. So today's session I do predict that it will be pretty fast, because as we know that Singapore companies are pretty straightforward. And it's something that we are familiar with. So in terms of the information, it will be quite straightforward lah. We don't have to go very deep into understanding the company. Yeah, right now we have, I think, 23 of you guys watching on the Facebook Live. Okay, so good to see all of you. So once again, apologize for some technical error at the start. So I know some of you probably were in earlier. Yeah, so I was just getting ready. Yeah, anyway, if you have been following us on our Buy or Buy series, and it has been useful for you, so it'll be good if you can actually share this Facebook Live, so that your friends will also be able to see what we are doing, what we are sharing, and of course, moving forward, do encourage them to also like our Facebook page, so that as long as we have any upcoming videos, be it the Ask UI series, or is it the Buy or Buy series, or any of the other interview series, they will be able to actually be the first person to be notified for our upcoming videos. Okay, right now it's about 2:05. We will just wait for about 1 or 2 minutes, okay, and then we would actually get started. Okay, so very, very interesting company, Challenger, okay, a company that we are all familiar with, especially right now. I think with COVID, we probably want to upgrade for example, our webcam, our speaker, our laptop. So if you have bought something from Challenger over the past 1 month, okay, if you have bought something from Challenger, can you just type in 717? Okay, let's see how many of you guys actually bought something from Challenger. If you have bought something from Challenger over the last, okay, let's say the last 3 months, Okay, can you type in the 717 in the Facebook comments? I'll be able to actually watch them. Okay. Okay, cool. Abdul, yes, I do see your response. Okay. PE Chen as well. All right. So, Delia, Siu Song, Mr. Lee also. Wow, okay, good. 717. Yeah, I actually kind of regret asking you guys to type 717 because it kind of reminds me of the 717 durian. Yeah, now it's the durian season. So probably a lot of you guys actually probably have bought durian. And right now all the durian are delivered online, okay, directly to your house. Okay, so we're gonna get started, okay, because time now is 2:05, in fact 2:06. Right, so once again, a very good afternoon to all of you, okay, for tuning in to our Buy or Buy series. So today, this is the company that I want to talk about, which is Challenger. Right, and of course, if let's say you want to actually follow us on what we are doing, okay, and of course, when you watch the replay, you can actually follow us on our YouTube, which is Ultimate Investing. And we actually have done up quite a lot of other companies as well. So do subscribe to our YouTube channel and you'll be able to see all the videos. But once again, before I start, I just want to do a disclaimer. Again, this is for educational purpose. So please do your own due diligence, all right, before you actually invest, because your money is actually, it's your money lah. So do make sure that you actually do your own due diligence. Right, so once again, today we're going to go through using this particular format on Big Profit. So we're going to talk about the background, industry, what are some of the growth potential. Then we're going to compare it with some of the competitors in the market, the risk, the opportunity, and of course, the last one is in terms of the financial, how does it actually looks like? So that's the financial fitness. Okay, so starting with the first one, okay, background. So we are all pretty, I would say most of us should be pretty familiar with this brand called Challenger. All right, so if we look at the group structure of this particular company, you can see that they actually have quite a few branding. Okay, they have quite a few branding. So within their business, actually they have some other subsidiary as well. So I'm going to talk about some of the key subsidiary that they actually have. So one of them is actually this company called CBD Vision. So it's actually one of the small company within Challenger Group. So what they do is they basically do electronic signage, things like on the LED display and things like that. Okay, so this is one of the company. The other company is this company called In-Core System, okay, Private Limited. So this company very interesting. Okay, back in 2008, actually they started much earlier, but Challenger actually bought over, acquired them lah. Okay, a 70% share in this company called In-Core System. So what they offer is actually database. You can see customer interaction and of course demand and lead gen solution. So pretty interesting concept. I would say right now is very, very popular. But at that point of time, I say that this is actually something that is just starting out. So you can see at the bottom, okay, In-Core System started another business unit called StarShield. Okay, and StarShield is actually the largest network of IT extended warranty and repair services in Singapore. So I would say that that is actually something that is actually more relevant to what we want to find out. So basically, when you buy something from Challenger, usually they will offer you their in-house warranty, okay, as well as servicing. Okay, all that will be under StarShield, and actually everything is done under this company called In-Core System Private Limited. And so, okay, of course, because they have different business units, we also want to understand which are the one that is more important, which are the one that is less critical to the business. So if we look at the revenue based on 2018, okay, you can see that 97.8% of the revenue actually comes from the IT product and services, which is the Challenger brand itself. The electronic signage only constitute about 0.4%, which is really small. And the In-Core System Private Limited, you can see it's about 1.8%. That is, of course, I would say the repair side and the extended warranty portion of Challenger. So again, it's not going to be very critical. So that is why, okay, today we're going to focus more on the store itself, the Challenger brand, the main branding itself, okay, because I would say it's, yeah, the sales, if the sales goes up, it will directly impact the business. And of course, if sales goes down, it will directly impact the whole business. So if we look at the retail footprint of Challenger, so right now they actually have in total 41 different outlets across Singapore. So right now they're actually a local startup company, okay, and they are pretty much everywhere in Singapore, pretty much everywhere in Singapore. So far they have not expanded overseas yet, but and I don't think they have plans to expand overseas as of now. But right now everything is in Singapore. So you can see that they have a flagship store, which is located at Bugis Junction, okay, basement 1. So that's one of the largest store that they have. And of course, the rest of them is actually termed as Challenger Superstore. That means those that are relatively large, okay, relatively large. And of course, I would say not too long ago, they actually started this thing called the Challenger Mini, as well as the Challenger Mobile. Okay, so those are basically outlets that are slightly smaller in sizes. As you can see on the bottom left, okay, usually the shop is, I would say, maybe about 1,000 square feet or less than that. So it's actually much smaller. Okay, so those are the Challenger Mini. So of course, the product that they actually offer at Challenger Mini is also relatively lesser as compared to the Superstore. So one new branding that they actually come up with is this brand called Pit Money. Okay, so what Pit Money offers is basically, later I'm going to share as well, is actually refurbished product and of course second-hand product. So that is going to be their key selling point. Okay, that means things are going to be relatively even lower as compared to the Superstore. And of course, at the bottom right, as you can see, they have this new branding called Musical Boutique. So this one is actually located at Ion Orchard. So just by the location itself, we know that this is going to be a more high-end, a more established, and even if you look at the branding, it's actually totally different. They didn't even use the word Challenger over there. Okay, yeah. So this is basically a high-end music stores. So they actually do more, for example, music testing, and then different branding in terms of the product. Okay, so you can see these are all the main concepts that they actually have right now. So the flagship store, the Superstore, the Challenger Mini, Challenger Mobile, and of course for the Pit Money is more for demo. That means, for example, those laptops that they use in the normal store, after sometimes they actually put it into the Pit Money and they actually sell it away at a relatively lower price. And of course for pre-owned. All right, so pre-owned could also be refurbished unit, or it could also be refurbished unit. And of course, for the last one, Musical Boutique, they focus mainly on the high-end audio. Okay, so the whole environment is definitely a lot different. So that is something that, okay, first of all, we can see that this company is constantly changing. Okay, it is not just like a fixed one brand and that's it. So you can see that they try to adopt different kind of concept to cater to different target audience group. So for example, for the Pit Money, it's basically for people who are more price sensitive. People are looking for a with lower budget, but yet they want to actually still have the product. And of course, for the high end one, people who are actually go for those more branded, okay, audio branding, then of course they will actually look for the Musical Boutique. So this is actually what the StarShield offer. Okay, so you can see that nowadays people, when it comes to buying laptops, right, you know, we all know that the competition is very, very strong. You know, there's online presence, even offline, there's so many different retail brands selling laptop. You know, but one thing that I would say Challenger do offer is basically extended warranty, okay, which is StarShield. So as you can see over here, it's actually the largest network in Singapore. And if you look at the recent promotion that they're actually running inside their website right now, they're actually offering 6 months StarShield Lite plan. Okay, so these are some of the things that, you know, some people when they buy a laptop, they actually want to buy, they prefer a warranty. So comparing Challenger, and maybe they were comparing with Harvey Norman and some of the other brands. So this could be a distinct advantage that Challenger can offer, okay, which is the free warranty, extended free warranty. Yeah, so of course, if we want to compare with some of the peers, okay, so right now, actually, when you think of IT product, you know, what are some of the brands that you can actually think of? So of course, we have Challenger, but you know, some of the bigger brands out there are, for example, Best Denki, Quartz, even at the bottom, Harvey Norman and Gain City. those are very, very established brand, okay, and of course, all of them, they came from overseas lah, okay. In fact, I think Gain City might be local, but Harvey Norman, Best Denki, and Courts are definitely overseas branding. Then, of course, we have New State as well as a New Box. Okay, New Box focus mainly on just Apple product, and New State, okay, what they offer very similar to what Challenger, mainly focus on IT product. You know, but what we can see also, some of them are no longer around. Okay, some of them are no longer. Yes, like what Edmund mentioned. Okay, very, very good point. Okay, New Box as well as New State, they have already gone bankrupt. Okay, they have already gone bankrupt. So you can see the Challenger is still surviving. Okay, yeah, that is something that is really amazing. Okay, so that is why today, actually, even though this is not an industry that is very, very, I would say, with high growth, very, very popular or very profitable, but yet I would say that Challenger has managed to actually stay very strong because of the management. Their management has been doing a very, very good job running the business. So on top of course, all the brands that we have mentioned, okay, of course, we all know that online itself is also a very, very big competitive playground. So we have Lazada. And if you look at Lazada itself, when I type in Acer, so you can see what happens is that Acer, they themselves, they actually put their laptop on Lazada as well. So usually for laptop branding like Acer, Toshiba, you know, Asus, they actually distribute to all these big brands, okay, big IT stores to distribute their product. But right now with online e-commerce, what happened is that all these brands, they themselves, they can actually go online direct. Okay, they can actually go direct. And of course, if you go to Shopee, same thing, you will be able to find, for example, this one, Lenovo official store. So all these are official stores direct from the brand itself, from Lenovo. So these are, again, direct competitor lah. And of course, if we look at, for example, Lenovo itself, actually, if you go to their main website, okay, they do sell laptop as well. They do sell laptop as well. But of course, the thing is, for us to take note is that when you actually buy from, for example, Lazada and Shopee, because they actually have existing stock. So most of the time when you buy a laptop or any of the IT product, you would be able to collect them almost, if you were to collect them immediately to the store, you can collect them immediately. And of course, if you were to do delivery, usually it will be like 1 to 2 days and they'll be delivered to your house. But if you go directly to the Lenovo website, which is lenovo.com, okay, over there, they actually mentioned that the shipping will take, you can see, more than 8 weeks. Okay, more than 8 weeks. So sometimes the price might be lower because it's direct, you know, but again, usually when we buy something, we want to be able to collect and we want to be able to see it as fast as possible. Yeah, in fact, maybe after I click, within 1 hour appear in my doorstep, I don't mind paying a little bit more for that. So I would say that the timing is actually very important when it comes to e-commerce. And of course, right now we're going to talk about the growth of Challenger. Okay, so you realize that, okay, I don't have any slides for growth. Okay, but I'm still going to talk about it because why? Think of it that way. I would say that Challenger is actually in an industry that relatively has declining growth. Okay, definitely it's a declining growth. And of course, with competition that is very, very strong, not just from the different branding, but also on the online presence itself. Okay, so I would say that I don't expect Challenger to grow much. Okay, I don't expect them to grow much lah. But of course, with the new concept that they actually came up with, which is the PIT money, focusing on you know, product that are more price sensitive. Yeah, so that would be an area whereby I think that there might be potential. Okay, there might be potential, but right now, as you can see, Challenger is actually kind of still testing the concept. Okay, so if it's profitable, proven to be profitable, you might see more and more PIT money stores actually appearing. And of course, on the other hand, there might be Challenger stores that might actually close down because the business might be affected. So we shall see. And of course, if you look at the refurbished market, okay, the pre-owned market right now, most of the time we actually got it from website like, for example, Carousel. But the thing about this is that would you actually go to Carousel and buy a refurbished or even a pre-owned laptop? Okay, so maybe this is where maybe I'll just take some feedback from you guys. How many of you would actually go online okay, to a website like Lazada and a website like Carousel to actually buy a high ticket item like a laptop? If the answer is yes, can you just type in 1? If the answer is no, can you type in 0? Okay, and then we are going to see what are some of the response from you guys. So the good thing, like I said, for Pit Money is that because the laptop is over there, okay, and usually what they'll do is they will offer their in-house, I would say, warranty by StarShield. So you know that should there be any issue with the laptop itself, you would be able to actually go back. Okay, you'll be able to go back to Challenger or Pit Money and directly get, like a refund or things like that, or even get repair. Yes, Edmund is right. Carousel also sell brand new. Yeah, but I mean, we are just comparing in terms of the pre-owned market, in terms of the pre-owned market, right? So I would say that that could be an area whereby Challenger or rather Pit Money would have potential growth in that particular sector, whereby they are selling pre-owned items, but they have a physical stores for you to actually go there and have a feel of how it looks like and feels like. And of course, coming to the next part, which is the risk of this particular business. Okay, so this is actually extracted from the very recent annual report generated by the, this is mentioned by the CEO of the company. So they mentioned that in view of the global economic and geopolitical uncertainties, as well as the recent COVID-19 outbreak, the retail environment will definitely remain challenging in 2020 for Challenger. Okay, and therefore what they will do is they actually prioritize enhancing their product offering as well as optimizing operational efficiencies and productivity. So they do tell you upfront that it's going to be a challenging period for them. And of course, what they're going to do is they're going to focus more on the efficiency of the business, and of course, making sure that they actually offer a wide range of products so that consumer would actually like buying from them. So of course, if you look at some of the risk in the retail sector itself, we all know that rental is definitely a killer, especially in the current market situation whereby COVID-19, the stores can't be open. But I think one thing that is good is that the government actually do give quite a lot of grants and subsidies to actually help with all these retail stores. So that does help Challenger itself, at least for the time being. And of course, the next thing is the manpower challenges. Okay, so manpower challenges, we all know that it's hard to get to hire Singaporean, and most of the stuff, if you want to hire foreigner, you have to pay foreigner tax and levy and things like that. So it's definitely not going to be cheap as well. And of course, the last one I would say is one of the most critical. Okay, it's actually the change in the retail scene. Okay, the buying habits of people are actually changing. People are more used to buying online. And when you actually go online, the thing is you actually compare. So you will basically just jump from this website to the other website, and you will just see which website actually offer you the best deal. Okay, so maybe I can just share a very simple example. So for example, yesterday, I was actually buying this microphone. I was buying a microphone from Audio Technica. So what happened is that I first chanced upon this product on Shopee. Okay, I found this shop in Shopee that specializes in audio, and they were selling this microphone at $158. Then after that I went on to Lazada and I found another shop, okay, that is selling on Lazada for the same pricing. But what happened is that they were telling me that, hey, 3 days later they are going to run this mid-year sale. So probably you know that when there's a sale, definitely the price is going to be slightly cheaper. But the thing is, they did not disclose how cheap it's going to be. They just tell you that 3 days later there's going to be a sale. So for me, as a consumer, is I can buy directly. Both is 158, but if I wait a few days, I will probably be able to get it slightly cheaper from the Lazada website. But what happened is that, right? Okay, the good thing is that on the Shopee website, what happened is that I actually asked the shop some question, and they were actually very, very prompt to help me with some of my queries. So for that, right, I really wanted to kind of like support them, but then as a consumer, when you have another website that is cheaper, you'll be like, should I go for service or should I go for pricing? What happened is that subsequently, okay, I still continue to bought from Shopee, the one that gave me the service, okay? But the reason is because I managed to find a discount code, okay, from Visa for $10 off. So in the end, I managed to bought it at about $140 over, and that kind of helped me to firm down the deal. So as you can see as a consumer, right, because it's online, you can simply just compare by jumping from website to website. So you realize that it's going to be very, very competitive, especially nowadays. Everybody knows how to use the internet, and everybody is very tech savvy. So yeah, that is something that I would say that is definitely going to be challenging for Challenger. Yeah, with the retail scene changing and how people actually buy the product. So what happened is that I do see that they are going to come out with more and more things that is going to distinguish themselves from different competitor. Like for example, the warranty, extended warranty. Maybe they will give you more freebies and things like that. So to make the whole bundle looks a lot more attractive. And of course, I think what is very certain is that nowadays, a lot of all this delivery, they make it within 1 or 2 days. In fact, something interesting is I think I saw from Gain City. Okay, when you buy something from Gain City, what happened is that they actually promise same day delivery, which means that if you buy something from the Gain City before 3 p.m., they will be able to deliver it to your doorstep on the same day. Yeah. So I think that is something that people would be, that they don't mind actually paying a little bit more, but they are able to actually get the product almost instantaneously, okay, within the same day or at the very most 1 day later. Yeah. So I would say it's very challenging, and we will see how Challenger is able to actually change with that. And something that I am pretty assured is that based on the management, you can see that they are pretty adaptable to changes, and they have been changing, throughout the last 10 years. They have been changing with different branding. They have been testing out with different markets. So that's something that I'm pretty confident about the management. And so right now we're going to talk about opportunity as well. Okay, and I think this is the one of the most important part for today, and actually why I'm actually quite interested to look into this particular company. So just to share with you guys, okay, back in 2019, which is actually just 1 year ago, Challenger actually had a delisting offer. That means for if you have been invested in Challenger, so there was an offer to actually delist. So what happens is that this company, DG Leap Capital, is offering a cash exit offer of 0.56. Yeah, that means if let's say you were a shareholder at that point of time, then if let's say this delisting went through, basically you will have to sell away all your share at 0.56. Yeah, if you were to accept. And of course, what happened is that, right, in the end, this delisting offer did not actually go through. Okay, this delisting offer did not go through. Reason being because they actually stated 2 criteria for the delisting to be approved. Number one is that more than 75% of the shareholder must approve. And of course, not more than 10% must reject this offer. Okay, so this is the 2 criteria. So in the end, it was actually rejected because there was 11% of the shareholder that rejected this particular delisting. So that comes to something that is very, very interesting, because at that point of time, okay, I would say the share price was somewhere around 50 cents or maybe 40%. So which means that if the delisting go through, you will definitely be profitable. And that is unless you bought it maybe at an even higher price. But I would say that most of the investor would be profitable, would be actually making some money because of this delisting. But as you can see at the bottom right, what happened is that the shareholder, they feel that this company is a very, very solid company with good cash flow, and it shouldn't be just sold at 0.56. In fact, as you can see, they actually feel that the fair value, it should be at least $1.15. Okay, it should be $1.15. And this is a company that is cash rich, and every single year they are making more and more cash. I mean, more and more profit, and of course translate to more cash. So as a shareholder, they feel that they should be paid more in the long run. So they feel that at 0.56, it's like a too cheap a bargain to be actually sold off. So 11% of them actually rejected this offer. So why I say that this is something that is interesting is because right now the current share price is 0.45. Okay, which means that if let's say I do feel that the CEO, or rather the founder of this company, they will still probably try to delist it again. Okay, they will definitely try, but there's a rule that once you actually try to delist and it fail, right, you have to wait 1 year later. Okay, you have to wait 1 year later. You can't keep on trying and trying and trying. But at least you know that, okay, 0.56 is kind of the benchmark, okay, that this company can be sold at. That means people already want to buy over at 0.56. And of course, if this business continues to be profitable, continue to generate positive cash flow, I do see that, the offer would actually increase. Okay, the offer should actually increase higher than 0.56. So that to me is a huge opportunity for this particular company, Challenger. So like I said, although this is not a very exciting business, not the best growth business that I actually like, but because of this particular news, and because right now the business, although with the challenges in the market and things like that, later on when we go to the financial, we will be able to see they are actually still profitable. They are definitely still profitable, and that is why they are not going to be like New State. They are not going to be like New Box that is going to go bankrupt. This is a company, even with the challenges that is ahead of them right now, they are still profitable. Yeah. So right now, I'm going to look at the financial fitness itself of this particular business. Okay, we as usual, we will go for the 7 financial checks. But one thing is going to be different is number 7. Okay, things to take note is that we're going to use PE ratio to actually look at this company because PEG, usually we use PEG less than 2. And that is mainly used for growth company that is growing at a very, very high percentage growth. And sometimes we do look at dividend yield, okay, to be more than 5%. But again, this is not a dividend company. The company, this Challenger, they do distribute dividend, but the company itself does not have any, they did not state that they are going to distribute dividend. So when they're happy, they distribute. When they're not happy, they can choose not to distribute. Okay, yeah. So which means that we are not going to use dividend to look at this particular company itself. So we're just going to look at PE ratio to look whether is it undervalued or overvalued. So first of all, let's look at the revenue, which is at the top corner. You can see that from 2015 to 2019, the revenue is not exactly growing. So in terms of the criteria that we are looking at, unfortunately, the first one is going to fail. But if we look at the earnings per share, which we are just going to focus on positive earnings per share, is this company profitable year after year, or are they making money? So you can see that even with the challenges in the market and things like that, yes, they are still profitable. Okay, they are still profitable, which is a good sign. And next, we look at the growing free cash flow. Okay, so this is basically the cash flow. So you can see that it is amazing, and in fact, the numbers has been growing. So I would definitely give it a pass for this company in terms of the cash flow. And if you look at the efficiency of the management, generating returns for the investor based on ROE more than 15%, you can see that they are generating, even up to today, they are still generating an 18% ROE, which is definitely something that is good. Okay, sorry, it's supposed to be it's supposed to be a tick. Okay, yeah, supposed to be a tick, so that's supposed to be a pass. Yeah, so of course we look at net margin more than 10%. Okay, so please change the cross and the tick to be different direction. Okay, yeah, the net margin is a fail, but the ROE is a pass. So net margin, as you can see, because this is a business that doesn't have high margin. Okay, yeah, it's very, very competitive, and you can't actually make a lot of money selling very, very high laptop prices. Yeah, so that is why the margin has always been less than 10%. And of course, if you look at the interest coverage, okay, this is a company with 0 debt. So once again, fantastic. And we look at the PE ratio of this particular company, which is what we want is less than 12. So right now, okay, the PE ratio is 8.81, which is also a pass. And if you look at the 5-year average PE ratio of this particular business, is at a 10.15. So right now, it's also below the 5-year average. Okay, and once again, that is a good news. So Jackson actually were asking, will COVID-19 situation further reduce its cash position? Like I said, I don't think so, because the company is profitable. So what they will do is they actually, they will be able to sustain from the profit itself. So to summarize everything, we can see that, okay, out of a 7 criteria, okay, 2 of them actually failed, okay, which means that they still have a point of 5 out of 7, which is still amazing, okay. So again, this is good. I'm going to just summarize with a buy, okay, some of the good points about this company, and later I'm going to share about some of the not so good point about this company as well before I give the decision whether this is going to be a buy or is it going to be a buy-buy, BYE for me. So let's start with the first one, okay? One of the very, very good point, okay, rather opportunity is the delisting price of 0.56, like I said, it served as a benchmark for this company. So as the business continue to grow, it would also translate to potentially higher delisting price in the future. And if you look at the management, like I said, the management is relatively conservative. So they have been ensuring that the business cash flow is healthy and business remains profitable. So this is not a company that is very, very fanciful. They don't expand aggressively. Okay, so far I didn't see any of their stores actually closing down. Okay, in fact, 2019 there was 2 stores that were closed down, but that was due to renovation of the shopping mall. Okay, not due to bad sales. So pretty much, I would say most of the outlets that they actually have are all profitable. But of course, the management are closely monitoring each and individual stores. And of course, for the last one is that the growing trend in electronics and IT devices, especially post-COVID. So I would say that especially during this period, definitely a lot of people are, people without laptop will go and buy laptops. People with old laptops, they will actually upgrade and actually buy over their new laptops. And I think with technology nowadays, the prices of laptop are a lot more affordable. Okay, a lot more affordable. There are people with 2 laptops, 1 desktop at home, and you have your iPad and you have, and things like that. So you see, even for Challenger, they do cover brands like Apple as well. Yeah. So I would say in this particular segment, or rather moving forward, okay, there will be more people who will continue to buy electronics as well as IT devices. And for example, you upgrade your modem, you upgrade your router, you upgrade your mouse, you upgrade your earpiece. So you can see everything, you can go to Challenger and buy them. So in terms of just the IT demand, okay, it is actually, I mean, Challenger, I would say, is one of the most comprehensive when it comes to IT product itself, and some of the brands that they do offer as compared to brands like Courts, Best Denki, those are very, very big mega stores, but they also sell like sofa, bed, and things like that. But in terms of IT, I would say Challenger do offer quite a wide variety of options for people like us. And so some of the bad point about this particular business, okay, number one, the retail scene in Singapore is facing a challenge due to online marketplace. So we are not sure how it goes moving forward. But as of now, we know that it's definitely going to be competitive and going to be challenging. And the second one is the management delisting decision in 2019 could actually signal a weakening and declining business. So the fact that the company the CEO wants to sell away the business, it could basically tells that, they also know that this is going to be a challenging business moving forward. So with the right pricing, they wanted to sell it away. So I mean, if they know that this is a good business to continue that generate good cash flow, they will want to keep it. But at the price that they are willing to sell it away, which is 56 cents, it kind of shows that the management, they are also a little bit unsure about the potential or the future of the business moving forward. And the last one is that this company, in terms of the dividend payout, it has been very, very conservative. I would say that the current dividend yield is somewhere around 2 to 3%. Okay, and the management actually has no dividend policy to share profits with shareholders. So they can choose to distribute a good dividend. They can also choose not to even cut down the dividend to 0. Okay, it's all up to the management. Yeah. So these are the not so good point. But overall, okay, I would say that this company, I do kind of like it. I do kind of like it. And I do see that there's still certain opportunity investing in this particular business. And it's, of course, it's a brand that we are very close with. And we will be able to see how they are actually performing in the market itself. So maybe before I release my answer, okay, I just want to hear from you guys. What about you guys? Do you think this is going to be a BUY, a buy for you? Or is it going to be a BYE, bye-bye for you? Okay, just put it into the comments, okay, and then before I release my answer. Okay, so before I release my answer, yeah, what is the cash on hand that Challenger has? Maybe I just answer some of the questions that you guys have. If I'm not wrong, if I never remember wrongly, it's somewhere around, let me see. I need to go and check, but if I never remember wrongly, it's about 60 million. yeah, but yeah, maybe you can go and check it out lah. Just check out the financial statement. But I do know that the financials are pretty strong. Okay, wow. It seems like, okay, only one person say BUY. The rest of you guys actually say bye-bye. Okay, the rest of you. Yeah, it seems like you guys really don't like the retail scene. Okay, you guys really don't like. Yeah, thanks, Edwin. 78 million. So definitely very strong cash holding. Okay, so I'm going to release my answer. Okay, probably this is going to be something that is pretty contrarian to what you guys actually mentioned. Okay, yeah, but as you can see, I look at the cash flow of this business and really in terms of the potential and the selling price. As you can see, this is a business that has $78 million. So you know, when people actually want to buy over the business, they have to factor in that the fact that this is a cash cow. This company is so rich, you know. So for me, okay, again, this is for me, yeah. Okay, I actually give it a buy. Okay, I actually give it a buy, but actually, like I said, I don't expect this company to grow massively. But what I'm actually kind of expecting is another buyout, another delisting offer, you know, that the management will actually go and do moving forward. So yeah, I kind of betting on the delisting, but whether or not, okay, I would say I'm also focused on the business itself. So at least I know that this is a company that is still profitable. They are still making money. The cash flow that they have will continue to grow. The number of cash that they have on hand will continue to grow. And yeah, this is something that I kind of am comfortable with. I'm actually quite comfortable with this. Okay, so with that, it's going to be a BUY for me for Challenger. Okay, so yeah. Yeah, so this is the last slides for me. So once again, okay, thanks everyone for tuning in. So there's more resources when you actually join our Telegram channel and subscribe to our YouTube as well as Facebook. You know, but again, before I end off this particular series, okay, if let's say you guys, okay, wants to receive the PowerPoint of, or rather the PDF of this particular presentation, okay, what you can do is you can help us to actually like this particular video and help us to do a watch party. Okay, so for those of you who actually help us to do a watch party, we will actually send you the PDF version of this particular Challenger presentation slides. So with that, I'm going to end off my session today. I hope you guys, yeah, a bit like on block. Yes. The 10% block, is it still in place? Okay, I think that is depending on each and individual company for the delisting. Yeah, but yeah, anyway, the 1 year is going to be over, so we will see whether this company will they look for another buyer to probably try to do it at a better price. Okay, try to do it at a better price. Okay, so for that, thanks everyone. I hope you guys stay safe, invest safe, and I'll see you guys in our next buy or buy series. Okay, bye bye.